All right. Thank you, Igor, and welcome back, everyone. We are now just beginning the London session. It is around 5 a.m., 2 minutes past 5 a.m. Eastern now. And as far as the price action is concerned, okay, Euro is beginning to bounce, but just about a few pips, not more than 20, 30 points again. Uh, gold is uh, gold is telling us I mean, it's going one line, but it's approaching resistance. It looks like with a diverging scenario. We'll look into the chart just in a moment, and dollar index is also looking slightly weaker at this point in time as we move into the London session. All right, so let's start with the wave counts with the Euro USD hourly as usual. Uh, it is just about lower degrees impulse complete to continue the story, to recap the story, followed by a corrective decline ABC. So we have a minute wave 1, minute wave 2, and what we are seeing on the right hand side is again a potential wave 1 and wave 2. So it is a series of waves 1s and 2s and 1s and 2s at least 3 times if you look at the chart from the daily perspective, and 2 times if you look at the chart at the hourly or a 4 hourly perspective. So if we go by this, and if it holds, what we are saying is correct, then we are. I repeat, sir, we are just about at the threshold of beginning the third of third wave rally, right from this price all the way through 750 levels. And believe it or not, it's going to go quite a bit steep and fast. If I give you an idea about how much time it could take, it is 3rd February, and there you have 9th February. Uh, so almost 6 calendar days. If you add another 6 calendar days to today, it comes to 17th of Feb. That is just around the next Monday. 17th of Feb. Let's check if the Fibonacci extensions of the current lower degree counts where they are pointing. The first target is around 584 and the second target is around 735. So potential always remains to hit at least the 600 mark by next Monday, around the 600 mark by next Monday. So that's the kind of speed we are talking about. If the third of third wave begins to materialize either today, sometime in the New York session, or maybe tomorrow, all right, that's the story. So trading point of view, we are absolutely convinced, at least in the two chart setups we are going to discuss right now. The first one is the euro. In fact, not two but three chart setups: euro, dollar index, and pound. So we are quite convinced about the high probability trade setups in euro, where we're looking to push higher, turn higher from current levels. So trading point of view, potential longs are still valid, and they are quite a bit around the same range, around 300, 320. Remember, we are talking about those levels last week. Maybe partial longs and another partial longs around the 300, 320 zone. So we are still in that vicinity. In terms of optimism, to tune the trade, it is a good one still. So potential longs can be still taken with a stop around 1.02 and potential targets around 600 and 750 going forward. All right, so keep an eye on the trade ideas as well, because we keep on pushing and updating stories there as well. All right, so let's go forward to the dollar index followed by pound and then gold. Remember, sir, dollar index is a different price with respect to the provider that you are trading with. This provider chart is from 8 cap, and the high which the dollar index has printed is 110.09. Not every provider will be printing that high. So somewhere you see 109.80 as a high and a lower high printing at 109.40. So according to your provider, you have to use your stop loss, that's all, and the entry and target limits. So kindly be aware of that. All right. So the dollar index is also telling us a 5 down followed by 3 waves after story in line with the basic structure of the wave principle. Not only that, it has also moved another 5 waves potentially down and probably a 3 wave up move also looks complete. Maybe it may push a bit higher. You never know, towards 108 or 108.70. So again, we are talking about a series of waves, ones and twos and ones and twos. And if that is correctly done or correctly studied, and if it holds good, we're kind of pushing lower. We're going to produce a third wave lower uh, anytime sooner. All right, and as uh, as we try to find out where the euro could be like in the next 7 days or so, here's the potential price target for the dollar index by somewhere around the 17th of Feb. It's around Monday, next Monday. The first one is around 105.60, again falling in line with the 127% of the larger degree wave count. And the second target is pointing much lower towards 103 and even lower. So at least if not 103, we can count on 105.50 by next Monday. If I mean, this drop can come in a couple trading sessions as well. You know how prices move when they have the right trigger. All right, so let me remove recent Fibonacci extension. We don't want to see much or too much of noise or too much of screen being held down with the indicators and trend lines and stuff like that. All right, so trading point of view, we are still within the vicinity of a potential optimum short entry, which could be taken. Traders can position themselves on the short side potentially with a stop around 109.85 or maybe around 1010, but at least 109.85 according to the this chart feed 8 cap. All right. All right, and the next story where the action is for the past few hours is undoubtedly the metal, and it continues to defy all resistances at the moment. Aggressive shorts have been taken in the form of trade ideas as well. So let's see how the price action is shaping up. We won't be going too aggressive if we get tipped up here, but the overall structure is now, I mean, it's threatening for a continued rally. It could be threatening for a continued rally, and we are still positioned. It's not too far from where we were calculating around 28.85 and 28.87. It's really not too far from where we were anticipating minute wave B to terminate, right? But we need to see if the turn has to come, it has to come now. If we are not seeing a turn from this price, then we'll have to readjust accounts like wave 4 coming down there as a potential A, B, C, D, E triangle, and that could be the fifth wave in action. And remember, the fifth wave, if it is the fifth wave in action, then we are not going to stop at 2950. We're not going to stop at 3000. We're going all the way towards 3100. If just in case if that is wave 4 and it terminated as a triangle, it doesn't look like, but we just have to keep in mind if that's the case, then we are moving towards much higher levels. 3205, those kind of levels. All right. So 29, this is a critical zone where it would be decided whether we are on or whether going to further push higher or it's going to be a massive reversal from here. It's just a matter of time before bear should be coming back, because the one thing which I really like noticing and really like trading upon is the bearish diverging scenario. And believe it or not, the bearish divergence scenario on the 4-hour chart is screaming out for, for a potential reversal anytime soon. It's only a matter of time before it does so. So it's a price high, a new high being printed around 2906, while you can see the RSI clearly lagging behind the previous swing high when the high was printed around 2881 last week. So it's a clear and a strong kind of a bearish divergence appearing on the 4-hour time frame. But we need to see a follow through now, and it could take a couple of hours for price action to really follow through after a price action, at least a couple of hours. We don't see a bearish divergence right through the same wave, but the bearish divergence is clearly visible from previous swing highs. That is that goes back to April 2024. I mean, that peak is still not being met. All right. So we'll hang on to the short side aggressively. Trading point of view, if you're standing aside, you might want to stay away from the aggressiveness of this trade setup. This could be a very aggressive trade setup where you can initiate shorts with a or potential shorts with a stop loss around 29.10 as recommended in the trade ideas section of the portal as well. But as I said, it's on the aggressive side, and if you want a further price confirmation, then we need to see and we need to allow prices to drop below 2650 or 2850 Friday lows around the New York session. Until that happens, it would not be a certain price confirmation that bears are back in control. All right, so that is the story. What gold chart has been depicting quite clearly and quite aggressively. We need to see some kind of confirmation before we can re-enter on the short side with a more convicted entry and a protective stop loss. All right. Okay, so those are the three stories, and then we have one more with uh, a very high potential trade setup, and that is pound. We'll have to go back on a normally chart, and if I just do the larger degree counts here with an arrow, it is kind of indicating we've got an impulse of a lower degree in place. Not only that, we also have got a zigzag corrective wave 2 in place around the 2250 zone, which is again followed by wave 1s and 2s. So if we go by this analogy of waves 1s and 2s, a series of waves 1s and 2s, at least twice, then the third wave is just about to cut loose on the north side. Right, so we've got wave one and two, and then again we've got wave one and two, and that is being tested back to back. So it's an ABC, a flat wave two. If that is correctly done, I think we are just about at a threshold to begin the third wave rally. Uh, and if you allow me to take an extension, let's take an extension of the larger degree wave one, and that is the potential wave three, the 161%. And the 161% is pointing at 1.29 of the larger degree. And if we take it at smaller level, one lesser degree, that the third wave is pointing towards 1.2844. So we are trading around 1.24 right now, 10th of January, London times, and it possibly is pointing towards another 400 points rally easy. With respect to the time frame, it is 3rd Feb to today. So add another 7 days or calendar days. It comes to next Monday, as we did for Euro and dollar index. We should be, if this is correctly done and if it holds well, then we should be seeing 2850 levels in pound by about 17th of Jan. All right, so let's see how the price action is now holding up and shaping up going forward. All right. Uh, if we look at, if we have a quick look at what Dow Jones futures are doing, now Friday was a good steep decline after we completed the second New York session. By close, it actually this was not expected. We were waiting for some sideways action or maybe a one more high, but if we go by the wave counts, just about that wave count, this one, that is wave one, potential two, three, and four. If we have one more lower push or drag down towards 44,000, that that builds up the first initial story of an impulse wave. So just to give you a heads up, uh, if 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 we see a drop somewhere around the 43,900 or something, that's exactly the five wave structure or pattern which we were looking for going forward, which can really drag prices further down. All right. So in the Dow Jones, we are holding aggressive shorts, no doubt, but we are still waiting for a confirmation on SPX 500. But tell you what, it's not going to take much time before these guys actually fiercely turn lower from where they are trading, and uh, there won't be any stoppage after that because support on the daily chart is only coming around the 40,000 mark after that. Not even 40, it's even below that. Once that level 41 is taken out, the next major support straight away comes to 37,000. That's the wave four of one lesser degree. Ideally, it should go towards 37,000, but we are still waiting for one more wave. We don't want to just commit ourselves in a bit hasty manner. All right. And one more story that we can pick up before we bring it a pause here is certainly Bitcoin, where we are not expressively uh, into the long side, but we are not expressively either into the short side. We are holding flat for now, and we will continue to hold until further price action confirmation. On the north side, we are looking for a break above 102 uh, to go some aggressive longs or build some aggressive long with a tight stop loss. And on the short side, we are waiting for 89,000 to be taken away for the first impulse wave to be prepared and ready for us, and we'll take it over from there. All right. So these are the stories as we built up into going into the London session. And let's bring it a pause here, and we'll be back again in a few hours to touch base or continue from where we left right now into the New York session. All right, so once again, thank you for tuning in, and I'll see you guys after a few hours. So I'll hand over to Igor right now, and I'll see you back. Thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.